Shiba Inu might take a really hard hit soon, and if that happens, it would be no thanks to the Joe Biden administration. Just yesterday, the Joe Biden-led administration made some announcements that might change the world of crypto, and by extension, Shiba Inu. To find out what those announcements are and how they might impact SHIB, make sure to watch this video to the very end. It's very important that you listen to everything we'll be talking about in this video. Disclaimer: this is a giveaway winner from yesterday. Also, if you're interested in getting price predictions and crypto news literally every hour, then join my Telegram channel. What's up, SHIB Army? Thanks for joining in for another video. But if you're new around here, allow me to welcome you specially. In this channel, you get all the latest SHIB updates as they happen. So if that's what you're looking for, do well to join the family by hitting the subscribe button and the notification bell so that you know immediately when I post a new video. Now let's jump into today's video. As I mentioned earlier, the Joe Biden administration recently made an announcement that might impact crypto all over the world. But before we go into discussing that, let's look at the crypto scene in the United States. While the US is unarguably the world's top economy, it looks like it's been shy about adopting cryptocurrency, unlike other countries. People definitely still trade in crypto. You're probably even one of them. But crypto is yet to be adopted into the country's mainstream economy. And while a number of countries have been courting the idea of their own CBDC, it looks like the US has chosen to remain silent on that issue for now. However, just last month, the first Bitcoin futures ETF was launched in the US, and that is, without a doubt, a big deal for Bitcoin and crypto in general. Why? Well, it tells us that the US isn't completely averse to crypto after all. Now, you probably already know what futures ETFs are, but for those who don't know, here's a quick rundown. So, Futures Exchange Traded Fund, ETF, is basically a financial product that allows investors to invest in Bitcoin in futures contracts with the agreement that it would be bought or sold at a later agreed-upon time and price. An investment in a futures ETF is not exactly an investment in a cryptocurrency, but an investment in a contract. It basically allows investors to trade digitally through their regular investment accounts, effectively bypassing the security concerns that sometimes plague crypto. So why then did I say that the launch is a big deal for crypto? Well, as I mentioned before, if the US government is opening the doors to digital currencies that bear close resemblance with a crypto, it could mean that the US government is not exactly averse to crypto, which could mean that a full-on authentication might actually be a possibility we can confidently look forward to. This is probably the reason why when the futures ETF was launched, Bitcoin saw a significant rise in value. The US might still be shy about adopting crypto, but a good number of other countries certainly aren't, with the most recent country being Singapore. Earlier in the day, the head of Singapore's central bank, Ravi Menon, announced that the Monetary Authority of Singapore is setting the scene and putting regulations in place to welcome crypto firms to operate in the country. He mentioned that we think the best approach is to not clamp down or ban these things. With crypto-based activities, it is basically an investment in a prospective future, the shape of which is not clear at this point. But not to get into this game, I think risks Singapore being left behind. Getting early into that game means we can have a head start, and better understand its potential benefits as well as its risks. So, as it stands, firms that can meet regulations that are being set down can operate in Singapore. Riding on this announcement, the value of crypto is sure to see a significant boost. One can only hope that the US government will take that leap from allowing the launch of a Bitcoin futures ETF to allowing for the adoption of crypto into the mainstream economy. Countries like El Salvador already did this with outstanding success. If the US toes the same path, the impact of that singular move will easily trigger the worldwide adoption of the crypto market. That said, it looks like we might have to shelve our crypto ambitions for a while because this leap might not be happening anytime soon, thanks to the recent announcement by the Biden-led administration. But hold on to that thought because I need to pivot into some good news real quick. This channel has a daily giveaway of 100,000 SHIB. For a chance to participate in the giveaway, all you have to do is subscribe to this channel, like the video, and leave a comment down below. #ShibaInu. Good luck! Now, here's why I said that the leap might not be happening anytime soon. Yesterday, the Biden administration's Working Group on Financial Markets, the Federal Deposit Insurance Corporation, And the Office of the Comptroller of the Currency released a report which basically urged Congress to impose bank-like rules on stablecoins. The impositions include requiring stablecoin issuers to be FDIC insured against losses, being restricted in terms of their commercial affiliation with other companies in order to avoid the concentration of wealth and influence, and requiring custodial wallet providers to be subject to federal supervision to allow for proper risk management standards. Now, you'll agree with me that one of the most attractive features of cryptocurrency is the fact that it is not regulated by any governing body, even though that could spell volatility for the market. But then we have stablecoins, which are basically the low volatility version of cryptocurrency. They are digital currencies, quite alright, but they are usually backed by a stable asset like the dollar, allowing them to be more stable than regular crypto. So you can see why some people who want to invest in crypto but are afraid of the volatility of the market might swing for stablecoins. Anyway, going back to the announcement, the proposed impositions are definitely going to pose challenges for the business model of stablecoins, especially for stablecoins like Tether that operate a really loose business model. Worse yet, that could actually threaten the very existence of some of these stablecoin issuing companies. Remember that the US is practically the largest economy in the world, and while the government hasn't officially adopted digital currencies, a lot of transactions are still carried out in the country. Clampdowns in the US could spell significantly less transactions with digital currencies in the country, and this would definitely have a ripple effect all around the world as well. Speaking on the reason for the bank-like impositions, the acting comptroller of the currency, Michael J. Su, mentioned in a statement that the rapid growth of stablecoins as an innovative and unregulated means to engage in speculative digital asset trading, lending, and borrowing is equal in measures awe-inspiring and unsettling. Now, it's easy to interpret this to mean that the US government is not open to the idea of digital currencies. However, that's not exactly true. They actually seem to open the idea, but are wary of those platforms that do not offer investors security of their funds, which is what they're trying to introduce with the regulations. In fact, a good number of stablecoin issuers seem quite confident, in spite of what some might consider reason for panic. For instance, Jeremy Allaire, the co-founder and CEO of Circle, mentioned that this is a huge progress in the acceptance of stablecoins and provides a path for their adoption as fundamental infrastructure for financial and economic activity in the coming decade. He seems quite confident that stablecoins will not only survive, but thrive on these regulations. However, it doesn't look like good news for regular cryptocurrency, and here's why. A lot of people would be more willing to invest in stable digital currencies that have the backing of a government like the US. But hey, time will tell about that. Anyway, back to stablecoins. Now, the impositions might see to the elimination of certain stablecoins, but those that survive might become a lot stronger than they already are and absorb the customer base of those other stablecoins that were hit badly. As you can see, there's absolutely no need to panic. The US government isn't shutting down crypto transactions, and regulations do not mean that the government is not open to the idea of crypto. In fact, on the contrary, it could mean that they're beginning to take an interest and so are putting in these regulations to allow for easy adoption, just like with Singapore. So hold on to your Shiba Inu tokens and buy more if you can, because if cryptocurrencies become mainstream in America, then a bigger boom than Shiba Inu has seen in recent times is sure to hit. Of course, this is not financial advice, just my opinion. Make sure to do your own research and don't forget that the crypto market can be quite volatile. And with that, we come to the end of today's video. If you enjoyed this video, then please like the video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. If you're a true Shiba Inu fan, then you must check out this video.